What's going on, everybody? Welcome to another episode of the Monday Market Update with yours truly, Kevin Weedmark, aka the Mortgage Mouth. And as always, each and every week I come to you with what happened this past week, right? What moved markets? What can we expect this coming week? We're also going to talk about a complete shakeup. And what I'm talking about there is the Trump administration. And lastly, staying focused is a must right now in today's marketplace. So let's just dive right into what happened this past week. And the big news was tariffs, if you recall, right? So tariffs were the talk of the town. They were going to be implemented, 25% to Mexico, Canada, 10% to China. Then Mexico and Canada did exactly what the Trump administration was looking for, et cetera, and China actually has responded to those tariffs. But even with the pause, so what really happened was Mexico and Canada sent troops to the border. What we're really trying to address, or what the Trump administration is trying to address, is immigration, fentanyl coming across the border. They agreed to send some extra troops in handling that crisis. And for that, we put tariffs on a pause. But the funny part is they have still spooked the market. They are still the talk of the town. And the big thing there is sometimes perception's reality. I tend to say, look, let's not worry about tariffs, whether they come or they don't. Let's worry about the facts and what is happening now. And that seems to be what the market has done at the present time. Although tariffs did spook the market in believing that they obviously could increase the cost of goods and services here in the US, although there would also be a pullback in the labor market, so kind of offsetting each other. And what we have seen is a slight dip in interest rates. Also, we saw jobs this past week, huge, from JOLTS to Nonfarm payrolls to initial jobless claims to ADP. And honestly, all jobs data came in a little bit light. It was saved on Friday by revisions to the previous non-farm payroll numbers. They went from about 220,000 to 300,000. Traders love that information. They love seeing a healthy economy. And what it did is it pushed interest rates a little bit higher as we closed the week. But overall, since Inauguration Day, interest rates have been ticking down. The 10-year Treasury and mortgage-backed securities have been moving in a positive direction week after week after week. We're just chipping away. So what do we have this coming week? And all eyes are on inflation. A couple big things. We have CPI, the Consumer Price Index, and we have PPI, the Producer Price Index. We have core and then the regular. Core is the one that the Fed really looks at, and that is going to be coming to us on Wednesday and Thursday of this week. As we've said before, inflation is the biggest data that the Fed is looking at. And why this information is really important is because we had Fed members speaking last week on CNBC, clearly indicating that all eyes are on these inflation numbers. Because if you recall, in January, February, and March, Q1 of 2024, we saw inflation spike. So the Fed is really curious, are we going to see the same thing this time, where we've seen a trend of inflation coming down, looks like we're getting a hold of it, only for it to really rear its head back. So the Fed is going to be watching that closely. And right now, because we're looking at a bumpy Q1, like I've talked about, with continuing resolution and everything else coming, no one is expecting the Fed to do another rate cut until their July meeting. So we have a ways to go. So these data sets are going to be really important to keep an eye on, because it's going to allow traders to predict. Again, they're always forward thinking of what the Fed is going to do, and we may see some lower interest rates, or we may see some higher interest rates. I think that's going to come right in forecast. I think inflation remains sticky until we get energy independent, which I know the current administration is working on. The other thing we're going to see is we're going to see Fed members get on their soapbox this week. In particular, just Fed Chairman Powell, he has to testify. And I didn't really realize how much that guy speaks in public. He is talking all the time. And the biggest thing I want to watch is, obviously, what is their verbiage? Does it change? And do they get political with the upcoming continuing resolution, with tariffs, and what the Trump administration is doing across the board? It is rampant. It's going to be really interesting to see what several members of the Fed have to say, and does that move the market? I think their comments have a greater potential to move the market this week than I think the inflationary data does, because I think inflation is going to come in right where it has been. And I think that's going to be a positive sign from the Fed standpoint, because we're not seeing the spike like we saw in 2024 that I just mentioned. The next thing, right? Hey, the Trump administration is on a tear. They are shaking everything up. So I wanted to address that really quick, because it's stuff that we in our business just need to be aware of, because it may be something that one of your clients brings up, or it may be something that we just want to pay attention to. And the first thing is the CFPB. That looks like it is going to be eliminated. Not only was the director fired and replaced, but it looks like that's going to be an entire dismantle of that entity. And really what the CFPB was brought around once we had the fallout in 2009, it was really brought together to protect the consumer, right? More government involvement. They oversaw, they revamped, disclosures from a mortgage perspective, disclosures from credit cards. Look, I think this is just one of those things that you get people that are going to be nervous. The fact that government's not involved, I don't really see the necessity for the CFPB. I think a lot of those tasks can be pushed off into other departments. It could be a cost saving, and I think in the long run, by eliminating that department, it's going to be another measure where we're bringing down the federal deficit, which will be a positive. But it's something to keep an eye on, because you're going to hear some chatter that things are going to get worse. Tariffs, look, the big one on the tariff side is home builders. Home builders have basically come to the Trump administration and said, look, we need your help. We cannot, right? We have a supply problem. That is the biggest problem, so we're told, in the housing market. So if you're going to place tariffs on a lot of the goods that we use to build these homes, the prices are only going to go up. And all we've seen is prices going up since the pandemic. So this is one that I 100% agree with the home builders. I'm hoping that the Trump administration steps in and they pass on some of the goods that and material that builders use for these homes, so that we continue and they get positive and they remain optimistic, and we see permits and we see new builds and we see construction starts. That's what we really need to see if we're going to overcome this supply problem that we have, right? More affordability. The other thing there's a lot of talk of, although I don't think it's anything that we need to be alarmed about anytime soon, but it's the privatization of government-sponsored enterprises, Fannie Mae and Freddie Mac. I know that the Trump administration is thinking about privatizing, bringing in, private money and so on and so forth, and really revamping and restructuring those two entities. I think that's something that there is way too far many things on the table currently. It's something for us to keep our eye on, but I don't think it's something that we need to be totally alarmed at. The one that we saw is fraud and waste are obviously everywhere throughout the government, whether you like them or not. The Trump administration was elected to kind of weed that stuff out, and starting with the USAID, I think it's clear the rampant fraud and waste that is going on in our government. Next, we're going to see the Department of Education and so on and so forth, and we're going all down this line. I bring this up because it's going to cause a lot of uncertainty, which is going to cause interest rates to they're just trending down a little bit. The more uncertainty we have, the perception from a trader standpoint is a slower economy potentially, and they're looking for a place to put their money, which could be treasuries, mortgage-backed securities, which means that we could be seeing slightly lower interest rates over the course of the next 2 quarters, regardless of what the Fed does. That's really what I think will happen. And the beauty of rooting out all this fraud and waste is from a tax standpoint, right? We can bring down the federal deficit, and in the end, maybe we all can keep money in our pocket as opposed to giving it to the government so that they can go and waste it. So I think that's overall a great thing. And lastly, as professionals, we need to stay focused. Look, there is so much energy, optimism, excitement about the current real estate market, and I 100% agree. This is the best that we have seen it. The energy in our industry right now is the best we've seen it in years, right? And that's a fantastic thing, but we as professionals cannot get caught up in that, right? we need to make sure that we're pointing out and reminding our clients and reminding ourselves that real estate is hyper local. And what a beautiful time right now. Instead of putting out the post like, don't be left behind, oh my gosh, now's the perfect time. You don't know that for that particular client. The best thing you could be doing right now is putting on your professional hat, putting out amazing information that's knowledgeable, that's in depth, that's really insightful for your clients, for your future clients, for your social media posts, for your open houses, the material that you have, for your presentations, to really set yourself apart right now, because I see so many agents that are just talking about what is going on in the industry and the excitement, and I get real estate can be emotional, but I really believe that honing in your messaging right now about why people should choose you due to your professionalism and your knowledge will set you apart and set you up for a long-term success. All right, y'all. As always, I would love to earn your business. I would love to be a card that you hand out to one of your clients and let me take it from there and show why I should be doing business with your clients. And the number one reason is I love saving people money. Interest rates to cost. Been doing this a long time. There's no fluff. It's very straightforward. And I also have in-house jumbo products and have no lender fees on VA loans. Lastly, please don't hesitate and don't forget to subscribe to the Mortgage Mouth on YouTube. Every day I'm cutting a daily dose, giving you a very 2-minute breakdown, very quick 2-minute breakdown of what happened that day with regards to interest rates and the effect that it had, and possibly thinking a little bit forward. So please don't hesitate to give me a subscription. Would love it. Thank you very much. And I'll look forward to working with you. If you need anything like a flyer, a pre-approval, you just have a question, no question is a bad question. Enjoy the rest of your week. Happy selling out there. And if you need me, don't hesitate to reach out. Cheers.